Well, we're ready to go. Ed Dean is back. I was out for a couple weeks with some surgery, but I'm ready to go. Good to have everybody with us. Don't forget you can catch the statewide syndicated radio show on Talk Radio WBOB, morning 6 to 9 at WBOB.com. So it is the Florida Daily Show. Lindsay's out for a couple of days, so I'm going to help fill in. So as you know, my years as an economics reporter, I'm a free market conservative. I understand. I get it, folks. I know some of you are going to nitpick. Well, we're not truly entirely in a free market system. I get it. The government's always going to be involved in your life. So they get your driver's license, a home, taxes. It's just an inevitable, what is it, a necessary or a necessity or an evil that you want to call that you just can't get rid of, all right? So you got to have more of the market system, which is more of the marketplace, instead of what more you want coming from the government. So two of my favorites come on with me every week on the radio show. And let me just get to it. Let me introduce our guest right now, Steve Beaman, of course, with the Beaman Intelligence Group, who's one of the best economic analysts out there. Steve's one of our economic analysts at FloridaDaily.com. And then one of my other favorites, Pete Earle, excuse me, who is a free market conservative with the American Institute for Economic Research. Pete, it's the first time you've been on with us. I know you come on with me every week on radio, and you're one of my favorites, but there is no but. Steve and Pete, just two of my favorites. All right, Pete, let me start with you. I want to get into this whole gasoline prices, the war in Iran, all this other stuff. On an overall 30,000-foot view, we can talk about the economy. We can talk about where do you think it's happening right now. I got news for you. The White House kept claiming there's going to be a 6% GDP growth rate. Now, it may not happen because of the war. It doesn't matter. I don't think we're seeing 5% GDP growth rate this year. Pete, the 30,000-foot view as an economist, where do you view things with the economy? Give me the pro, the negative, the good, the bad, and the ugly.
So, I mean, if you put it all together, I think that the U.S. economy is still growing, but it's uneven and it's fragile. You know, inflation was cooling at the consumer level, but there's rising input costs now because of these energy shocks, and those are pushing in the other direction. A little softness in the labor market, not collapsing. Services are strong, but manufacturing consumption are losing momentum, partially because of those higher energy costs. So I would say that, we still have an expanding economy. The expansion is intact, but it's doing so with less margin for error. And growth, if nothing else, Steve will say, growth is increasingly dependent. It's always dependent on confidence, but right now that confidence is being tested. So I see a lot of vulnerability.
Before I go to Steve, Pete, is the fragile part all dealing with the higher prices with the war in Iran?
That's a big part of it, but we still have a lot of uncertainty about tariffs. Every so often the president will say something about tariffs. And then also, there's a lot of concern right now about what's going to happen with monetary policy because the Fed is in a bind right now. They're basically in their dual mandate issue. And we've got all these recriminations going back and forth between the Fed and the president, all that stuff. So for people in finance and in banking, that's an issue as well.
Steve, let me talk about gasoline prices. I keep saying all the time in this radio show that as a publisher, it's about messaging. Not sit there and give a bunch of BS. And I don't want to sound like I'm trying to beat up on the White House, but it's about messaging. I feel like I'm back during the COVID days. All we need is 2 weeks to, flatten the curve, turn the curve, whatever it's called, bend the curve, whatever. Then it's another 2 weeks. And it's another, it's another 2 weeks. And then, the war started at the end of February. Now we're going into 2 months into the war. Now, let me play for you a clip. Jake Tapper was interviewing Chris Wright, who's the energy secretary under the Trump White House. And they're all talking about, well, this is just a disruption. Things will start coming down again. Here's what Chris Wright said. He don't think gasoline prices, if the benchmark's at $3 a gallon, he don't think it's going to happen until next year. Here's the clip.
When you were on the show March 8th, I asked you when gas prices would go under $3 a gallon for regular unleaded. You said, quote, in the worst case, this is a week's, this is not a month's thing. When do you think it's realistic for Americans to expect that gas will go back to under $3 a gallon?
I don't know. That could happen later this year. That might not happen until next year. But prices have likely peaked, and they'll start going down.
It might not be under $3 a gallon until 2027.
Under $3 a gallon is pretty tremendous.
Prices have likely peaked. Oh, man. I mean, I get they want to ensure a good message. I get it all. But it's about messaging. Where do you see gasoline prices, Steve?
I sadly think he's right that we're not going to see him coming down as fast as anyone would like. The problem is this is not only causing disruptions in the supply chain, and Pete touched on that, it's causing a confidence thing. The White House has done a terrible job messaging this. You're getting different stories always on when this will get resolved. Now, the markets have seen it as very positive. We all follow the markets. They're at all-time highs, and they're doing great. But your run-of-the-mill business, just that guy on Main Street, is looking at this saying, I don't know what's going to happen. That is slowing things down. And the problem you've got is you're going to come up against the midterms, and that will derail the entire Trump agenda.
Yeah. Where do you see it, Pete, over the summertime with the summer blend of gas coming in? I mean, if you could get it, listen, I think if things start to come down, it's bragging rights. But is this? It sounds like I'm all about COVID again. It was a few weeks ago. It was always going to be the mid of April. Now it's going to be the mid of May, and now it cannot be maybe till September. And now it may not be till next year.
So one thing that people have cued on, or sort of like taking their cues from, is that the president said, they're going to go up quickly, but they're going to come back down twice as quickly. And that's not the way any commodities work, especially gasoline. They go up very quickly, and they take a long time to come back down. So I think that we could be talking about later this year. I think we could be talking about earlier next year. And then the other thing is that there's certain numbers, there's certain prices at which gasoline gets sticky. So it could get stuck around the round number, like, $3.50, $3.25, $3, that sort of thing. I mean, a lot is going to depend upon not only how things develop overseas, but also things like tariffs, things like, the consumer. So there's a lot of factors here. I think at the best case scenario, we're back down in the 3 to 325 range, maybe later this summer, maybe September, something like that. But it all depends.
Steve kind of mixed a little bit of politics, Pete Earle here, that if things don't come down by a certain amount of time, by the way, which I love talking to everybody, like, when do you think the best time prices need to come down? This could derail the Trump agenda. Pete, I know you're into the economic side, but you get into the political side. I love asking many of the guests, when does things have to come down to, at least if the barometer's at $3 a gallon, when does this have to happen for the president to brag about the economy going into the midterms?
Yeah, I mean, I feel like it has to, for that to be the case where he could, in a completely unqualified way, brag about the economy, it would have to happen before July, I think, because July is the meaty part of the bell curve when people take vacations, that sort of thing, when people are going to feel it. We also have this inexorable march upward of prices beyond energy and all that sort of thing. So, people are still going to feel that. They would need the gasoline prices to offset that, to get some relief in this ongoing affordability issue. So I think it would have to happen. We'd have to be down below, say, $3 by July 1st.
Steve, let me play you for this clip. Scott Bassett, who is a pretty bright guy, but he's not probably the first guy I would put in front of a microphone. And this is what he said about that, how it almost sounds like I'm listening to Jared Bernstein from the Biden White House. Hey, let's have the FTC, the Federal Trade Commission, and let's go after all of these gas stations and all of Amazon and Walmart for jacking up the oil prices. Listen to what he says. He almost sounds like him. He says, we're going to be watching these gas station companies to make sure that the prices come down. Listen to the clip.
And as I said this morning, too, we are going to be watching the gas stations because they raise prices very quickly when they stated when the crude oil prices went up. We hope they'll bring them down just as quickly as crude oil prices have come down.
It's kind of interesting. We still, Steve, I know you have to get out there and teach economics and how oil is a commodity, how oil works, and how that the crude oil or the oil that we get out of here isn't always refined properly. We haven't built a refinery since the 1970s. We still import a boatload of millions per day and per week out there. Steve, you get into this argument about oil, gas prices, the gouging. How do you kind of mix it up a little bit where the English version of you comes out and says, this is how it really portrays and this is how it really happens?
The English version of me says something like 46 cents a gallon, and everybody's gasoline is taxes. So don't be hitting the refiners for their 2 cents a gallon, or the distributor at the local pump for 5 cents a gallon. It's the taxes that are hurting people so bad on this. That's the affordability crisis. But I want to go back, Ed, to this whole conversation. I believe that you have a really smart group. I think Peter Earle knows what he's doing. I have a lot of faith in the kind of commentary that's being made here. But we're not able to put confidence into when these prices are going to start really hitting the road. How can you expect the independent business person to be anything other than strategically cautious, saying, I don't know what's going to happen, and I certainly don't know when? And that sums up the problem.
Yeah, Pete, I don't like this whole thing going after the gas station company out there. I mean, I get this question all the time. Well, why is gasoline prices near the beach? Much more than it's over. Okay, a lot of it has to do with location, with rent. And then I've explained this many times that gasoline and oil is a commodity. A lot of people don't understand. When I'm listening to the Trump White House, starting to sound like the Biden White House, when it comes to, let's go to the gas stations. I like to remind people, Pete, that many of these gas stations make their money off of lotto tickets, off of their food and their beer. They don't make all this amount of money off their gasoline prices.
That's absolutely right. In fact, this was something I wrote about maybe 4 or 5 years ago, in which the Biden administration was going after service stations, and I wrote an article and I said something along the lines of that. One of the reasons why the inside of those stores now looks like a drugstore, and they sell all sorts of soda and snacks and everything else, is because the margins on gasoline are tiny. They're very, very small. So, most of the money they make is not on gasoline, but on something else. Something else too, and that is that, Steve just mentioned about people, their confidence, all that sort of thing. And that is that, above $83 a barrel in oil, the positive effects, the tax benefits of the one big beautiful bill are being sort of worn down by the energy prices. So fiscal support is fading, and in effect, what was supposed to be stimulus is now being neutralized by these higher prices. But they're not going to come down by because of threats or anything like that. They're going to come down in their own time. It's a very, very complicated set of reasons to explain why it takes a long time for oil and gasoline prices to come back down.
Steve Beaman, let's talk about the housing market. Here was Fox Business Network Stuart Varney says that for the first quarter of this year, that housing prices, 26% home foreclosure. And of course, where's one of the biggest areas? Here in the state of Florida.
According to Realtor.com, home foreclosures jumped 26% in the first 3 months of this year. And the foreclosure rates were highest in Indiana, South Carolina, and Florida.
Steve, are we looking at a 2007, 2008 type of scenario? When you hear that clip, 26% of all of this is happening in 3 states, Carolina, Illinois, and Florida. Are we talking like another scenario like that or not?
I don't think we're even close to that. I think the banks were much, much more stable than they were in 2008. And I don't think the federal legislation's in place to force banks to be writing really bad loans. So I think we're a lot better than we were. But you go to the affordability thing, it does touch, as Pete said, on the Fed. And the Fed right now, there's talk of them cutting rates or increasing rates. Nobody knows. How do you build a plan when you don't know what interest rates are going to be? And so the affordability comes down to people, should they refinance? Should they not refinance? You're getting property tax rises to the point in Illinois where people are just walking away from houses because they can't pay it. They can't sell the house. So what do? You walk away. People need to understand government is the cause of most of these problems. It's not the free market. It's the government and its intrusive policies that cause real estate prices to get disturbed. It's the Fed that's playing around with interest rates when they really have no right to be playing around with interest rates and creating all kinds of instability and uncertainty in the economy.
Pete, do you buy into the area where I understand the real estate market's got to look out for its own, I get it, but everything is cut, like Steve said, cut interest rates. I'm not convinced even cutting interest rates will turn things around unless it's a significant cut. And the attitude is you're not going to get one for 6-7 months down the road. Or is the attitude, hey, I just might wait 6 or 7 months down the road before I buy a home here, Pete?
So 2 things. First, I think that this leap we've seen in foreclosures is really sort of based upon two things. Phenomenologically, I think the first is that for some people, prices have gone up enough that they're just walking away. The other thing is that people who managed to get loans at that 2 or 3% area some years ago, and if they were balloon loans or if they were floating rate loans, and now they're up at 6 or 7%, those people are underwater. They're getting crushed. Most people who locked it in, though, are okay. So that's what I think accounts for this big jump. The other thing, though, is that, as for the Fed is not sure what it's going to do now either. They say they have to remain data focused, partially because, they would like to lower if the employment rates start worsening, if unemployment looks like it's rising, but also with prices rising right now, and with not just in gasoline and things like that, they're actually thinking of raising rates. So they don't know whether to lower and accommodate. They're going to stay data focused, which means it could be some months before they do anything. Even if they did cut, and even if they did cut substantially, if they cut 50 basis points in the short-term policy rate, how much is that going to bring mortgages down? 15 beeps, 10 beeps, something like that, it's not going to be enough to make a big difference in most people's lives.
Steve, how does the conversation with you and clients in the small business area? I've always told people, we can brag about the stock market, but and I know you've said this many times, Steve, that the S&P, you focus on 500 companies. That's how you look at a barometer. I covered this as an economics guy, reported during the Obama years, let's say in the tech industry, where, Apple and Google are coming out with new phones, but out of the 10 companies, only 2 were making a profit. The other 2 were propelling the other 8. Somehow we brag like that was, economic, success. And it really wasn't, because 80% of the companies still in that sector weren't doing well. But the president brags about a stock market. Okay, we had ultimate highs during Biden. How do you, when you talk about the economy, you talk about the business world, are they more skeptical now? I mean, consumer confidence, consumer sentiment low. And is that all because of the war, or is that because of tariffs? Or, hey, we thought we were going to get some more tax cuts, and evidently that doesn't look like that's going to happen.
Let me break it down this way. When you're talking to companies in the micro level, start up to $1 million, they really don't care about the economy. They're much more concerned with whether they can launch a product into a consumer demand. It's a tailwind or a headwind, about whichever way it's going, but they don't think about it. When you start to go to those companies 1 to 10 million, they're starting to look at it. They're looking at tariffs. They're looking at cost of production, employment rates. They're looking at much more complex metrics. And they're the ones that are going, okay, do I make a commitment right now to grow, or do I hold off until this stuff stabilizes? I don't think we really know what's going to happen this week in the Gulf or in the Straits. We could see Iran do something stupid. And that's got people going, I don't want to jump and then regret that I did.
Yeah. Go ahead, Pete.
Same question?
Yeah.
I think exactly that. I think that when you talk about nano and micro cap companies, many of those people are looking at the next few days, the next week or something like that. Of course, the larger companies have interests that are more aligned with the broad economy, what the Fed's going to do. In either case, there's layers and layers of uncertainty. Pretty soon, if we don't see prices come back down soon, the midterms will be a new uncertainty, especially House of Representatives, where you have a lot of these smaller companies located. The Fed's probably not going to do anything until maybe October or so. And even then, what is it? Is it raise? Is it lower? We don't know. So, we're getting paralyzed right now by uncertainty. And it started well over a year ago with the tariffs.
Yeah. Pete, if the White House were to come out, and this is one of the things I don't like about the big, beautiful bill. All it did, the no tax on tips. There still is a tax on tips. The no tax on overtime. They just raised the exemption level. Okay, that benefits a small group of people, not overall in the economy. I like that he raised the deductions for some of the small business. I like that. But, I think if you really want to get instead of just jabbering about things and hope that it's going to get right over in the Strait of Hormuz and all the other stuff here, even here in the state of Florida, why not just come out and say, hey, I want to pass a significant capital gains tax, maybe a corporate tax cut, and throw in a few extra other things out there. And that's one of the things I didn't like about the big, beautiful bill. All it did for the most part, which is fine, was just extend what the current tax code was.
Right. That would be great. I would even like a statement to be made saying something to the effect that we've generated a lot of uncertainty, and from now on, we're gonna basically hold a certain line, and unless there's a really, really profound change or an emergency, we're going to stick with it. Even something like that, suggesting that they understand the effect that this uncertainty is having on businesses, these high levels of doubt about where policy will be 2 or 8 months from now, or that at 4 o'clock in the morning, something on Truth Social is going to change, the very background of the world that a lot of these business people are operating in. Something like that could establish a lot of confidence, or could at least start to put a firmer ground for decision making under a lot of these people. But I don't see that happening.
Steve, does this argument hold up? Like, you guys are in Florida all the time, where I live, and you'll get a lot of people that listen to my radio show that follow us in Florida daily. A lot of the MAGA crowd, the no regime change, the no new wars. Does the national security issue? I'm always curious by this. It sounds good, even though there may be some discrepancies from Tulsi Gabbard, who says, no, we don't really think Iran had an imminent threat. We play those clips on the air. Does the argument of gasoline is still at $3.50, $4 a gallon versus national security, what argument wins, do you think, down the road? Hey, inflation's higher. My back pocket's costing me more because of gas. Oh, but I got to worry about national security. I don't know if the national security argument holds up.
I think what you have is an initial trust that people buy. It's been 47 years. I mean, I was around when the Ayatollahs took over. I remember that whole hostage thing. And many of us remember that. So I think there was a little bit of grace given to Trump to say, okay, we kind of get it. The problem is we don't have a resolution to this yet. And the Trump White House is losing credibility because they are saying everything's great, everything's great, everything's great. We got it. We beat them. We beat them. Okay, it's not over yet. You've got a regime in Iran that it's like after Nazi Germany was destroyed, we had to denazify Germany. It took a long time to do it. The IRGC is very much like that. These are ideological people. They're not going away. If anything, they're just going to say to the Trump people, okay, and they're going to wait until Trump's out of office. I mean, it's a much more nuanced thing. And I think the longer it goes, the more you're losing that middle ground Republican.
That's a good point.
And that's the concern.
You know, Pete, when people try to, I'm a creature of Facebook, and well, you know, the gasoline prices might be 408, but compared to when Biden, who we all would agree, Biden's one of the worst presidents, I don't think people try to go down the path of the comparison. Okay. The Biden team tried to do this stunt where, well, you know, 30 years early, it was bad during Reagan's terms with inflation and high unemployment. That didn't sell with voters. I don't see a comparison of going, hey, it was worse under Biden, but it's bad, but it's not as bad with Trump. I think people can remember, but when it comes to, hey, we were enjoying $2.50, $2.75 gasoline prices, we jacked them up the fastest increase we've ever seen. I don't see it, Pete, as a comparison working out well for the Republicans.
No, I mean, you know, whataboutism has a very sort of limited range. And the fact is, like, you know, just like when people say, you know, oh, but the index only did this. Well, I don't eat an index. I buy food and I buy energy. And in the same way, yeah, it's true. We have tremendous jumps in prices by the summer of 2022. But the fact is, it's April 2026. I live here now. I pay these prices. And that's what I'm making most of my decisions based upon.
Yeah, that's what I'm getting at this whole thing. So we'll see where some of this goes. Hey, Steve, how do you this whole thing about housing? We got to cut this crap out where in order to succeed in life, you got to own a home and you got to get a college degree. Both of those have just been shown that isn't accurate here. Sometimes before you walk, you got to crawl. Sometimes you got to rent before you own out there. And I'm afraid that the government's just going to try to do everything it can, because we understand that once you get a housing economy moving forward, that's kind of like, hey, we got the Strait of Hormuz open. Things can start prospering now here. And, you know, the White House is throwing a lot of this money buying mortgage-backed securities out there. And I know this isn't to the level of 2007, 2008, but I like the idea, what you've talked about, what I've talked about, what Pete talks about. You got to get the government out of the way. And unfortunately, I'm not saying that we're going back down the path of 2007, 2008. But what I'm starting to see is a little bit of light shades of, well, the market, excuse me, the marketplace isn't moving quick enough, Steve. So let's get the government involved. That's what I'm starting to see here.
There's no question there is a natural tendency of people to say, if I can't get solutions, I want someone else to solve it for me. The problem in housing is it's not a right, it's a privilege, and it always has been. We have increased the size of houses in this country on orders of magnitude from what they were 30 years ago.
Right.
So when people come out today and say, I can't afford a house, well, you wouldn't live in the one from 30 years ago. I grew up in a house with 3 bedrooms, 1 bathroom, and 6 people. That was a normal house in those days. Today, people wouldn't begin to live in that. So I think we have a change in society there and expectations that is wrong. But what will happen is more of the government saying it's a right, and therefore we will penalize those who are making money on the homes. Poster child's going to be New York. They just put that $5 million and up tax on. Wait and see what that does. You can't penalize the producers, and that's what they're going to want to do in regular housing. Instead of getting the government out, freeing up development, they're going to put more restrictions in.
Yeah, Well, this is always a good discussion. You know, Pete Earle, maybe there's some shades for some of those that love tariffs. They get a little shade now, a little cover and protection from the war in Iran. I don't know the politics behind a lot of this. You know, you say it's what, end of July, gasoline. What do you say, Steve?
I think they better come down by the end of July at the latest. Otherwise, Trump's going to have real trouble come November.
Yeah. Hey, Pete, by the way, would you explain for the audience out there why gasoline prices, I can do it, but you do it much better. Gasoline prices can always jack up as an elevator, sometimes come down as a walk down the stairs, not as quick. Would you explain it to the audience?
Sure. It's the exact opposite of the stock market, which falls quickly and then rises slowly. Yeah. The reason why in commodities, there's a few reasons why. And that's the first is that, there's a lot of hedging going on. So there's a lot of buying and selling of futures and forwards and that sort of thing, swaps, all of those things, sort of slow the descent because a lot of firms have to buy when it starts coming back down to cover their shorts or to cover the puts or the sold futures that they put in place as a hedge. The other thing is that when you shut down a refinery or anything like that, it's not like a light switch. You can't turn it right back on.
Right.
It takes a while for things to get going again. When there were oil refineries being shut down at that one point early in COVID, when you had the futures price closed at negative $32 a barrel. That was in part because there was so much oil out there was nowhere to store it. So then you shut down refineries, and you can't get it back up in as quickly a manner. So it's very easy for prices to go up because people buy the physical, they buy the cash, they buy the futures. But then there's hedging that goes on. There's long-term processes, and for that reason, the unwind comes much more slowly.
Hey, Pete, it's like eating food. You can always put it on easy and then taking it off.
It is like that.
Yeah. All right. Pete Earle, economist with the American Institute for Economic Research, Steve Beaman with the Beaman Intelligence Group. And you can catch these guys. They come on with me weekly on my statewide syndicated radio show. So thanks for coming on today. Both of you.
It's good to have you back.
Yeah, man. I appreciate it. Yeah. All right, man. We'll talk to you guys during radio this week as well. Pete Earle and, of course, Steve Beaman. Both of these guys I always enjoy having coming on. Yeah, I'm back. It's good to have everybody, all the stuff that we've done. And this week, we're going to get into the governor's race. We're going to get into where's the governor on his property tax reform. I love my governor, but we're going to talk about all this. So I'm going to do it this week. Don't forget, you can catch my statewide syndicated radio program at WBOB.com mornings from 6 to 9. I'm your host, publisher of Florida Daily. Go like our we don't charge you. Go like our Facebook page. Go like our Google, our YouTube page, The Florida Daily Show. And watch us all at floridadaily.com.